Iraqi Dinar Today latest news Dinar. We invite you to visualize a moment that many currency holders anticipate with a mix of excitement and apprehension. The walk into a banking institution in the year 2025. Imagine the scene, the quiet, imposing architecture, the hushed tones of commerce, and the heavy folder you carry, a physical manifestation of years of patience and expectation. Your pulse quickens as you finally approach the service counter, ready for the transaction you believe will define a new financial chapter for you and your family. You slide your stack of Iraqi dinar notes toward the teller, expecting the process to be straightforward, a simple conversion of one asset into another. However, the routine encounter quickly takes an unexpected and chilling turn. The bank employee scrutinizes the foreign currency, taps a few keys on their specialized system, and then, with a shake of the head, politely informs you that they cannot process the notes. That single moment can feel like a profound setback, a door violently closing on your aspirations, and it is entirely natural for an initial wave of panic or frustration to wash over you in that instant of refusal. It is crucial to understand, though, that this rejection is not a judgment on the inherent value or authenticity of the Iraqi dinar itself. Instead, it is almost certainly a reflection of the intricate and often rigid operational limitations that exist within the internal structure of that particular financial branch. The frontline personnel in modern, large-scale banking operations are typically not equipped with the advanced, specialized training or the high-level management authorization necessary to deal with what are technically classified as exotic or high-risk foreign currencies. Their refusal is less about your money and more about institutional procedure. When the teller slides the dinar notes back to you, they are rarely asserting a personal opinion on the currency's legitimacy or making an informed appraisal of the asset's security features. Their action is a direct adherence to a stringent set of operational protocols and risk management guidelines that have been established at a far higher executive level than their position. To streamline operations and minimize their exposure to complex foreign exchange risks, many local bank branches have intentionally moved away from maintaining fully staffed, comprehensive foreign exchange departments on site, shifting that intricate work to centralized processing hubs. Consequently, interpreting a rejection at a local teller window as a final, definitive verdict on your financial future is a mistake. It should be seen, rather, as a constructive logistical indicator that you have simply started your journey at the wrong location within a vast, compartmentalized financial ecosystem. The global banking industry, driven by an acute focus on technological integration, compliance, and security, has transformed dramatically in the last few years, making certain types of transactions significantly more complex than they once were in previous eras of finance. Financial institutions are continuously upgrading and tightening their internal systems to address modern regulatory requirements, particularly those concerning anti-money laundering (AML) and sophisticated counterfeit detection. This relentless emphasis on compliance means that the physical exchange of foreign currencies, especially those from complex geopolitical regions, is subjected to a level of scrutiny that was simply non-existent a decade ago. The days of casually walking into any bank to exchange an obscure global currency are now largely behind us, necessitating a more strategic approach from the holder. Banks are consolidating their specialized resources, leading to a commercial environment where only specific, designated hubs or select major branches possess the required infrastructure and personnel expertise to handle the complexities associated with the Iraqi dinar. Grasping this structural reality is the essential first step in transitioning your mindset from a place of momentary frustration to one of calculated strategic planning. This clarity confirms that the obstacle you face is purely logistical and procedural, rather than intrinsic to the underlying value of the currency you hold. A critically important factor in any exchange attempt in 2025 relates to the technological standards employed for currency verification. Modern currency counting and authentication machinery relies on advanced, non-human sensors to verify authenticity. These systems scan for microscopic printing details, specific watermarks, complex color, shifting inks, and the precise metallic composition of embedded security threads. They are intolerant of imperfection, a reality that often leads to unexpected rejection. If a banknote is heavily circulated, possesses significant folds, or exhibits even minor physical imperfections resulting from years of storage, the automated intake machine may flag it as unreadable or suspicious. Many currency holders encounter rejection precisely at this point, not because their currency is counterfeit, but because it fails to meet the immaculate physical standard demanded by the high-speed, automated intake systems designed for maximum efficiency. Understanding this reality is key, highlighting why preserving the physical condition of your notes is as important as holding the notes themselves. This reality of stringent machine checks brings into sharp focus the absolute necessity of authenticating and verifying your holdings before you ever decide to step inside the bank. In this highly regulated environment, simply assuming your notes are genuine is not enough. You must be prepared to demonstrate confidence in their security features. Familiarize yourself deeply with the specific design details of the Modern Post 2003 series, including the horse head watermark, the color-shifting ink elements, and the embedded security threads, as these are the features the machines rely on. Furthermore, if your notes originate from the older pre-2003 Satamera series, you must accept that these are generally not recognized as valid, exchangeable tender within the modern international banking system, regardless of their authenticity. The ability to correctly distinguish between a collectible piece of historical paper and currently exchangeable modern currency is foundational knowledge. Possessing this distinction prevents both unnecessary embarrassment and a significant waste of time when you approach the bank counter for a professional transaction. For those serious holders seeking the absolute highest level of transaction confidence, engaging professional third-party grading services has become a highly strategic action. These specialized services authenticate the banknotes and then seal them into protective, tamper-proof casings. This professional encapsulation achieves a dual purpose. It guarantees the long-term physical preservation of the note against environmental damage, and it provides an official, verified grade of authenticity that is respected by financial institutions. When you present a certified, encapsulated note to a bank officer, you immediately elevate the nature of the conversation from a basic question of validity to a professional discussion of processing procedure. While not every bank or every transaction will demand this level of verification, having third-party certification eliminates the initial, time-consuming hurdle of suspicion and signals to the institution that you are a sophisticated client who respects and understands the condition and verified value of the assets being presented. It is also vital to recognize that the definition of a bank, in the context of high-volume foreign currency exchange, is not standardized across the industry. A small, local branch located in a rural or suburban area will operate with a drastically different set of capabilities and expertise compared to a main regional office in a major metropolitan financial district. The headquarters or major regional hubs often have the direct, established connections to international clearinghouses and employ the dedicated foreign currency specialists who possess the necessary background knowledge of the dinar's complexities. Therefore, receiving a refusal at a smaller community branch should never be treated as an absolute denial, but rather as a professional redirection. Your necessary task becomes one of strategically mapping out the hierarchical structure of the banking network to specifically identify those locations that are designated as legitimate foreign exchange hubs. It is a methodical approach that prioritizes capability over convenience, requiring you to move beyond simply relying on the branch that is physically closest to your home or business. The language and terminology you deliberately choose to use when engaging with bank personnel can significantly influence the outcome of your visit. An uninformed approach, simply asking if you can cash in your foreign money, is likely to trigger an immediate, generalized refusal based on standard, nonspecific policies. A more sophisticated, informed strategy involves asking to speak directly with the foreign currency officer or inquiring about the specific internal department responsible for exotic currency authentication and exchange. By intentionally elevating your terminology, you signal to the staff that you are aware of the banking system's internal structure and are seeking a specialized service, not just a general transaction that the average teller handles. This subtle but profound shift in dialogue can frequently lead to a helpful referral to a better equipped branch or a specific specialist who can genuinely assist you, transforming a quick, hard stop no into a constructive, actionable go here. In the financial environment of 2025, we are also observing the growth of highly specialized, high-volume currency redemption facilities that operate outside the model of traditional retail banking. These are often dedicated, appointment-only centers usually situated in major cities that focus exclusively on large-scale or niche currency exchanges. Unlike a regular bank lobby, where you might queue alongside people conducting routine daily transactions, these facilities operate with a primary focus on security, privacy, and stringent regulatory compliance. These specialized centers possess the most advanced verification tools and technology necessary to accurately process currencies that a standard retail bank would inevitably decline due to risk. Crucially, they also maintain direct, established lines of communication with foreign central bank networks, facilitating smoother transactions. Accessing these centers typically requires scheduling an appointment well in advance and passing preliminary personal screening, but they present a highly viable and efficient pathway for those who find the traditional branch model to be unhelpful or restrictive. Documentation has quietly become the foundational gatekeeper of the modern financial world, and its importance to dinar holders cannot be overstated in the least. In an era of intense regulatory scrutiny, banks are legally mandated to know the source of funds for every significant transaction they process. This means that possessing a complete, traceable history of your currency, such as official receipts from licensed dealers, detailed purchase records, and any relevant shipping manifests, is absolutely essential for a successful transaction. If you are unable to provide a provable paper trail demonstrating the origin of the currency, a bank may be forced to refuse the transaction, regardless of the note's physical authenticity. They do this simply to proactively mitigate their own compliance risks under strict anti-money laundering regulations. Treat your entire portfolio of purchase paperwork with the same high level of care you give the currency itself, because in the eyes of a professional compliance officer, the comprehensive paper trail is what ultimately legitimizes your asset and legally permits the transaction to proceed within the appropriate legal framework. When you prepare for an exchange, you must also anticipate the mandatory need for robust personal identification and the possibility of more in-depth background checks. For any transaction that crosses certain financial thresholds, standard government issued photo IDs may need to be supplemented with passports or secondary forms of identification to fully satisfy the extensive Know Your Customer (KYC) regulations now standard in global finance for 2025. This intensive checking process is not an implication of wrongdoing. It is the universal standard operating procedure for global financial compliance. Being meticulously prepared with a comprehensive portfolio of your personal identification and clear, traceable documentation of your currency's provenance clearly demonstrates that you are a transparent and cooperative client. This level of preparation substantially reduces the potential for friction at the initial intake point and naturally separates you from less prepared individuals who may inadvertently be flagged by the system for potential risk or perceived suspicious activity, thereby speeding up the overall process. We must also dedicate a moment to address the significant emotional component of this complex financial journey, as the feeling of rejection can act as a powerful deterrent to further effort. When a bank employee declines your transaction, it is exceptionally easy to internalize that refusal as a sign of personal failure, or to feel that your hopes about your holdings were somehow misplaced. However, successfully navigating the complex financial system requires the ability to detach your emotional state from the sheer logistical reality of the situation. A rejection, a hard no, is simply a piece of data. It serves the practical purpose of informing you that the specific location, method, or timing you chose for this attempt was incorrect or invalid, thus prompting you to immediately adjust and refine your overall strategy. The most successful and effective individuals in this field are those who are able to treat these difficult interactions as professional business meetings rather than personal judgments, maintaining their composure and strategically utilizing the information gained to inform and perfect their next attempt. The global financial infrastructure is currently in a constant state of transition, diligently integrating modern concepts like blockchain technology and secure digital ledgers with the more traditional methods of processing physical fiat currency. This ongoing evolution means that the systems used for verifying and clearing foreign currencies are becoming both significantly more secure and, paradoxically, more restrictive and exclusive in their operation. Some sophisticated institutions are beginning to pilot systems where physical notes are scanned and digitally matched against central bank records before any funds are officially released. This new level of transparency and security necessitates that the currency holder be both patient and absolutely compliant with the new digital and physical protocols. Understanding that the overall financial system is actively modernizing helps to frame the delays or procedural hurdles you might face as part of a much broader, necessary systemic upgrade, rather than a specific obstacle aimed against you or your holdings. This perspective helps maintain a professional and objective outlook on the entire process. If you find your efforts repeatedly hitting a brick wall at your primary banking relationship, it becomes strategically critical to maintain a diverse list of alternative financial institutions. Relying solely on one banking partner is a fundamental strategic error in the specialized world of foreign currency exchange. You should have established contacts or, at the very least, a clear understanding of the policies of multiple major national banks, as their individual policies concerning the Iraqi Dinar can vary dramatically and may change with little to no public notice. One major bank might decide to close its foreign exchange desk to cut costs, while a direct competitor may simultaneously decide to strategically expand theirs to capture new market share. By maintaining this necessary flexibility and consciously refusing to tether all your hopes to one specific logo or brand, you ensure that you will always have secondary and tertiary options available should your primary choice fail to perform the required service, thus maximizing your chances of a successful transaction. It is also important to note that the specific denomination and, critically, the printing series of your banknotes play a highly significant role in the likelihood of their acceptance. Banks overwhelmingly prefer the newest, high-security notes that have been issued in recent years because they are inherently easier for their machines to authenticate and are substantially harder for counterfeiters to replicate. If your portfolio includes a mixture of currency, especially older, heavily circulated bills, you should anticipate the possibility of partial rejections where only the most pristine, newer notes are accepted for exchange. This practical reality underscores the critical need for proactive inventory management. Knowing precisely what you possess, meticulously sorting your notes by their printing series and physical condition, and presenting them to the bank in an organized, professional manner can significantly streamline the entire process. This professional organization can also prevent the catastrophic disappointment of a blanket rejection of your entire currency portfolio, simply because a few older or damaged notes were mixed in with the rest. The specialized role of the foreign currency officer is one that every serious dinar holder must understand deeply. These are the rare individuals within the modern banking system who possess the professional training and authority to differentiate between a standard international travel exchange and a high-risk, exotic currency transaction. They have the internal access to the daily exchange rate sheets and the direct communication lines to the trading desk, resources that are simply unavailable to the general frontline teller. Your primary goal in any conversation should be to strategically bypass the general service staff and speak directly to this level of specialized expertise. It is often a highly efficient use of time to call ahead to various branches, asking specifically if they have a foreign currency specialist available on staff that day. This simple proactive step can save you countless hours of travel and the repeated frustration of visiting a location that is inherently ill-equipped to provide the specific, specialized assistance you require for a smooth and compliant transaction. Persistence remains the powerful engine that drives eventual success in this specific endeavor, but it must be a measured, calculated persistence, not simply blind, frustrating repetition. Repeatedly going back to the exact same teller who has already told you no is a futile, time-wasting exercise. The strategic action is finding an entirely different branch, a different banking institution altogether, or a completely different type of specialized dealer. The landscape of exotic currency exchange is notoriously fluid, with processing windows and opportunities opening and closing rapidly based on volatile global economic conditions and internal, often unannounced, bank policy changes. Those holders who stay diligently informed about which institutions are actively processing the dinar, and which ones may have temporarily paused operations, will always maintain a considerable, measurable advantage over those who operate based on old, outdated information or general, unverified assumptions. This commitment to real-time information is a non-negotiable part of the successful holder's strategy. This understanding shifts the effort from a battle of wills into a well-researched, professional process of elimination. We must also realistically consider the fundamental business reality that banks are for-profit enterprises designed to minimize their financial risk and maximize their operational efficiency. Processing a large volume of physical foreign currency, especially one from a region with perceived geopolitical complexity like Iraq, involves significant, tangible costs for the bank, including secure shipping, insurance, and extensive compliance overhead. If a local branch determines that the potential cost or operational risk of handling your transaction significantly outweighs the potential fee-based benefit, they are entirely justified in declining it. This refusal is purely a well-calculated business decision, not evidence of any conspiracy or ill will. Acknowledging this allows you to approach the situation with a constructive, professional negotiation mindset. You might explore options such as offering to consolidate your accounts with the bank, or clearly demonstrating that you are an established, high-value client whose total business is significant enough to warrant the bank taking on the extra administrative effort and processing risk associated with your unique currency portfolio. For those holding dinar in 2025, the concept of redemption centers, frequently circulates in news updates and online forums, and it is absolutely vital to separate verifiable fact from pure speculation. While certain specialized high-volume intake locations do indeed exist, they are first and foremost professional financial environments, not secret or magical hubs operating outside the law. They are bound by the exact same strict federal and international banking laws and compliance mandates as any other major financial institution. The often discussed expectation of simply walking into an exchange facility and instantly becoming wealthy without any due diligence or preparation is a myth that inevitably leads to disappointment. These centers are meticulously designed for maximum volume and efficiency, and they expect their clients to be entirely professional, fully documented, and absolutely ready to transact according to rigorous legal and professional standards. The successful use of these centers depends entirely on the client's own preparedness and adherence to the formal process. Another crucial layer of the strategic approach involves the careful timing of your exchange attempts. Banking systems frequently undergo major internal updates or significant policy shifts at the beginning of new fiscal quarters or the start of the year. A restrictive policy that effectively closes the door on foreign currency exchange in January might be subtly relaxed by June as new operational guidelines or risk tolerances are distributed internally. Therefore, a rejection you receive today is only valid for that precise point in time, and its circumstances may quickly change. By keeping a meticulous professional log of which banks you visited, the name of the officer you spoke to, and the precise, specific reason given for any rejection, you can begin to identify clear patterns and readily recognize when a system-wide policy shift has potentially occurred that might now work in your favor. This organized tracking turns a series of disappointing rejections into an intelligent, evolving map for your next and hopefully successful attempt at exchange. Let us once more powerfully re-emphasize the paramount importance of the physical condition of your currency notes, as this foundational aspect cannot be overstated. In the uncompromising optics of a high-speed automated counting machine, a small tear, an innocuous stain, or even a piece of old tape can instantaneously render a perfectly genuine note invalid and unreadable by the equipment. If you possess notes that are clearly in poor, heavily circulated, or damaged condition, your most effective route might be to seek out specific dealers or collectors who value the note despite its physical flaws, rather than attempting to force it through a demanding commercial banking system that unforgivingly requires perfection for processing. Being entirely realistic and objective about the genuine quality of your specific holdings is the only way to prevent the shock and disappointment of having a significant portion of your intended exchange unilaterally denied at the window. The narrative often circulated that banks do not want the dinar is fundamentally a profound misunderstanding of their operational capacity and risk calculus. Banks are facilitators of money movement, but they will only ever engage in transactions that fit squarely within their established risk profile and current compliance capacity. As the global economic environment continues to stabilize, and as Iraq continues its complex process of integrating into the international financial market, it is logical and entirely plausible that more and more banks will cautiously open their doors to facilitate the exchange of this currency. However, until that integration is seamless and universally adopted, the entire logistical and informational burden of finding the open door rests squarely on the customer. You must see yourself as the ultimate advocate for your own assets, and you must be willing to diligently do the methodical legwork that bank employees are neither trained nor paid to do on your behalf. While engaging with the wider dinar community can be valuable for shared experiences, it unfortunately also carries the inherent high risk of misinformation and unverified rumors. While sharing specific, verified experiences about which banks are currently processing notes in certain regions is helpful data, relying on unsubstantiated rumors or emotionally charged, unverified claims can lead you significantly astray and waste precious time. Always independently verify information by making professional contact with the specific institution yourself. A strategy that proved successful for a holder in one region might not apply to a holder in another due to distinct regional banking charters, local management decisions, or varied risk tolerances. As we all collectively look toward the future of high-value currency exchange, it is abundantly clear that those individuals who are highly organized, impeccably prepared, and emotionally calm will fare the absolute best. The chaotic approach of rushing to a bank with a shoebox full of loose, uncounted bills and zero supporting paperwork is a guaranteed recipe for failure in the sophisticated financial landscape of 2025. The successful holder is one who presents an entirely professional package: verified notes, meticulously organized receipts, clear identification, and an unshakable, calm demeanor that exudes confidence. This level of comprehensive professionalism mirrors the seriousness of the institution you are dealing with, and subtly commands a higher level of respectful service from the bank staff, dramatically increasing your probability of a smooth, successful transaction. In conclusion, should you find yourself faced with the disappointment of a rejection at the bank counter, take a necessary deep breath and internalize the fact that this is merely one of the initial steps in what will likely be a more complex, multifaceted process. You are not failing the process. You are actively learning the precise parameters of a highly sophisticated, regulated financial system. By methodically verifying the authenticity of your notes, flawlessly organizing your required documentation, precisely identifying the correct, specialized locations, and consistently asking the most informed, relevant questions, you are positioning yourself for the greatest possible chance of success. Continue to prioritize education over speculation, remain strategic instead of emotional, and always remember that in the demanding world of high finance, meticulous preparation is the ultimate, non-negotiable key to unlocking opportunity.